According to my analytics, the majority of you are under 50 years old. And if you are, this is probably the most insane boom that you're going to experience in your lifetime to date. Now, if you're over 50, you may have seen booms like this before, but according to your age at the time, you might not have been in the financial position to take advantage of those booms. What am I talking about today? Well, of course, I've got Bitcoin on the chart here, now up 65%, attempting to close at one of the highest daily closes in history. But I'm not only talking about Bitcoin and cryptocurrency in today's videos. We have Ethereum and XRP, obviously, in that altcoin space. Real estate, commodities, stock markets, the AI narrative is blowing up, and things are looking similar to pre-2000, the dot-com boom. Of course, they can keep going up, but things always inevitably end up in a crash. But I'm not going there yet. We've got lots of good things coming up. I think it has started. I've got heaps to share with you guys in today's video. Hit the like and subscribe to the channel if you're new here. So I think the most insane boom has begun. It is starting in some areas, like we saw a new all-time high in the last 24 hours for XRP. ETH is on its way to jumping to new fresh high prices. Bitcoin, of course, closing or getting close to closing at another new all-time high price. And amongst all of that, the NASDAQ also keeps putting in new all-time highs, being led by the AI charge. And of course, we've probably heard the narratives by now, AI taking over the world, and what's going to be used in AI is, of course, a lot of power. And that's obviously got a lot going behind it as well. Nuclear and things like that are really starting to push ahead in those narratives. But of course, Bitcoin lies on the other end of that spectrum, looking at this in terms of currencies with the printing of dollars, lots and lots of money printing going on, whether you're looking at the money supplies, the M2 global money supplies, the US, China, or things like what we saw in the last 24 hours with Donald Trump set to open US retirement markets to crypto investments. It might sound super boring, but hear me out. These things have happened before. And I was a late teen, 19 or so years old, getting into real estate at 20. I was working in the market then. And at that time, 2006, 2007, we had a similar thing here in Australia. In Australia, we had the Australian government allowing property purchases from our retirement funds, but that had happened before, but you needed all of the money. This time, they changed the rules to allow leverage. That's what this article is here. So they allowed leverage to that. The market kept going up, but this was around the peak of that cycle. Of course, things were a little different here in Australia for that peak. That's beside the point. What we're looking at is all this money coming out into the markets from retirement funds around the ends of cycles. That's exactly what we want to see. And so if we're in the markets taking advantage of it, hopefully we're riding that wave up, but as safely as possible. And I'll come to a couple of quotes from far more experienced people than I. So how much money is out there in the US? There are lots of different numbers that they throw out. Some say Americans had 9 trillion invested in 401ks, or 15 trillion in IRAs. So you put those together, you got 24 trillion. That was at the end of the third quarter of 2024. So presumably a little more now. Congress.gov shows that there is 26 trillion in employer-sponsored plans, or 38 trillion held in US retirement plans account. So there are lots of different numbers here. The main thing I like to look at is that there are essentially trillions and trillions of dollars out there. Obviously, not all of those trillions, not 100% of them are going to find their way in, but there is going to be calls for what if 1% of that money finds its way in, 2%, 5%. And then you'll start to see all of the maths getting put together with, well, if it's 5% of $20 trillion, there's 1 trillion. How much would 1 trillion blow up the crypto market and Bitcoin market? Those are the sort of extreme numbers that we'll begin to see, like I talked about in yesterday's video, where we start to see those big headlines. Now, our daily videos cover many detailed charts, data, indicators, and our forte, the cycle analysis, to help guide us through the investment cycle. So if you're a brand new subscriber to the channel, then I highly encourage you to get our weekly reports on Bitcoin, altcoins, and the economy, including the real estate cycle. They're easy to read in under 5 minutes each, making them extremely digestible for all investor levels. There are 3 reports coming your way, starting your week from Tuesday. It'll get you up to speed on how we forecast the markets and how we've been able to profit during uncertain times leading into and out of the cycle peak. It's completely free, so subscribe today using the link in the top of the video description and you'll receive your first report shortly. This happens towards the peak of the cycle, the winner's curse, and the greed continues to build and build and build, and that leads into these peaks. We need to see all of the money in the market. Essentially, as much money is sitting out there on the sidelines, we know there is trillions of dollars sitting out there on the sidelines, that has to come in. And then if the government wants to get even greedier and push the markets higher, if things are not looking so good in the economy, they can then bring out the leverage, which is why I brought up what happened in Australia in the previous cycle. So the previous cycle peak, roughly around 2005 through to 2007. And of course, at that peak, a lot of Australians are putting their retirement money into real estate. Some areas went down a lot. Other areas didn't go down so much in Australia. But of course, we're not talking about real estate that is income producing, giving you rent. We are talking about Bitcoin that has no rent. I'm all for Bitcoin. You've probably seen it on the channel before for years. Very much invested in Bitcoin and the narrative for it to go up. But we can't be stupid. Things aren't always as they seem. It doesn't produce any income. It could be a store of value, but if people go stupid, prices go up, and eventually people realize that there's nothing, it's not producing any income, and they have to sell at some point to take gains back. And don't take my word for it. I've got Jim Rogers here. Who is Jim Rogers first before I give you the quote? He traded with George Soros in the Quantum Fund. If you guys don't know who George Soros is, definitely go and look him up. You shouldn't even be putting money into the market if you don't know who George Soros is. He essentially brought down England in the early 90s, basically collapsed the British pound. The Bank of England tried to trade against him and they lost billions of dollars trading against George Soros. So Jim Rogers was trading in that fund, known as the co-founder of Quantum Fund with George Soros, also created his own commodities index. But beside that, Jim Rogers is a legendary trader and investor, remarkable 4,200% return in over a decade. So this is what Jim Rogers had to say. I have lived through or studied hundreds, possibly even thousands of bull and bear markets. In every bull market, whether it is IBM, because of course this is what was trading at the time. That was the interesting thing, being in the 90s, the .com era, or oats, because that's futures. Futures we obviously know now of oil and gold and silver and cotton and all those sorts of things. The bulls always seem to come up with reasons it must go on and on and on. We're definitely going to see that this time. We're seeing it this time. We're seeing Michael Saylor talk about why it has to go on and on, because Saylor thinks he can just keep getting more and more money. Great. Let's push the Bitcoin price up and also push the altcoins up. I remember hearing hundreds of times, we are going to run out of supply. Remember, he didn't write this yesterday. This was probably written in the 80s or the 90s, his quote, or even in the 2000s. Either way, we're going to run out of supply. We hear that all the time for Bitcoin. We're starting to hear it for Ethereum now as well. This time is going to be different. Yep, we still hear that decades later. Oil has to sell at 100 a barrel. Well, this gives you an idea. Oil, if it hadn't sold at 100 a barrel, it means it's got to be prior to the 2007 peak. Oil is not a commodity. It's different, the laughs, right? Gold is different from every other commodity. Bitcoin is different from every other commodity. Well, it is. It is. I hear it on the other side. It's okay. Well, damn, for 5,000 years, it has not been different from every other commodity. So essentially, he's trying to say this time is not different. Trade with the trend. Trade with the trend. Jim Rogers, 4,200%. He obviously wasn't being a contrarian every single moment of the market, but he also wasn't an idiot when everyone goes absolutely ballistic at the highs. That's the sort of stuff that I hope to present with you on the channel and, of course, with TIA Premium in further detail if you want to build your trading and investing plans. Link to that is in the video description. But I digress. This is the sort of stuff that we definitely need to keep our heads about, because we get towards those peaks of the market, which I've got more on in a sec. Things can get a little bit crazy, just like they did in December and January of this year. And then you just have to go back to March of 2004. So December of 2024. And we saw a couple of signals there. One in particular was our 3 days down. 1, 2, 3. This green is actually a down day. And those are sort of things that come up at peaks when people are going nuts. And it's saying why is the smart money selling out in such a strong fashion from an all-time high? So that's the thing I'm really going to be paying attention to as we continue to push higher. And I think we do have a lot further to go here, a lot further upside, provided we hold above that 7-year resistance line. It broke out on strong volume. They're the sort of things that you want to see towards a breakout. If it closes under, things are a little bit dire, but at the moment, they're looking very, very good. And that's obviously finding its way out into cryptocurrencies as well, at least the excitement and the sentiment. And day by day, we're seeing this grow higher and higher. So as an update on the daily exchange volume with how much money is coming into the space, we're at 65 billion today. Yesterday, 60 billion. Of course, that says the 15th and the 16th. The data is a day or two old, but we're seeing this grow day after day. We're also seeing the Bitcoin spot ETF flows staying strong, but you know that we have been using this as a contrarian indicator. Now is not the time to be contrarian for the Bitcoin indicator here on the ETF inflows. Those contrarian times are around peak price times or getting close to the peak when the ETF volume skyrockets. You might be having a new all-time high on the ETF inflows, and the price is at new all-time highs, or had been at new all-time highs multiple times and coming into some sort of peak or just coming off a peak. Like you can see here for Bitcoin, this was in January, and then again in January as it put in that roughly double top at $108,000, $109,000. That is important because I'm going to get to that with Ethereum. We're seeing some extreme levels for ETH. We're seeing the exchange volume pick up, and we're also seeing the slow grind higher, consolidating above previous highs. The Google trend words are also heading higher. We've got higher highs and higher lows for Bitcoin. This is in the red line in the background here. And then in the blue, you can see crypto's high highs and higher lows. It's starting to close the gap on the search volume for Bitcoin as well. So definitely want to see that coming into some sort of alt season. There are going to be pullbacks. That's going to be normal. I think everyone's getting really, really excited in these last couple of days, especially as the prices have climbed higher. And even on the 12 month, you're starting to see some breakouts of previous highs. So still strong volume coming in the background here. And for the S&P 500, new all-time high price. Remember these other wall of worry issues for the market. The Israel-Iran missile strikes were a massive issue at the time. And you can see the S&P 500 basically did 2 days down, or on the day of the missiles was 1 day down, and never saw that low again. We're now 7% away from that low, new all-time high price, new all-time high daily closes, and 31% away from the tariff crash low. So it is, to me, I would start to, well, I have rated this a blow off top. You're seeing very strong moves very, very quickly in the volatile stages of the end of the cycle, the winner's curse. Now, this isn't, I'm not talking about next month, not talking about the end of this quarter for the stock markets. I think this has a little further to go, especially as we're seeing more money flow out into the system and some of the narratives really beginning to pick up here. So that's the S&P 500, and a quick update of our cycle analysis. We've got the 20-year cycle in red. There is the potential of a bit of a slowdown just for a couple of months, but then later in the year, a nice strong move. That's looking at the 20 years. That's 2005, which led into the 2007 peak in the stock market. And for the 5-year cycle, we can see that it was similar times here, bit of a slowdown, a grind through July, but it had a run up into August, September, and then it slowed down. So each of those cycles are showing a slowdown after a move higher. Just when is that slowdown? That's what we're going to continue to follow with the cycles. So now's a good time to subscribe to the channel if you haven't already, or like the content if you're finding value from it. Now, although bull markets produce some crazy headlines, huge price targets, they also produce relatively strong trends, nice simple trends to be following. And if you're understanding how to follow those trends, you can make some significant coin, as our premium members have been making. This has been one of the largest trades we have seen, $400,000 in a month, based on the strategies that we teach in TIA Premium. And so if you're just new into the market, check out TIA Premium, learn how to trade or long-term invest so you can remain with the cycle throughout the years to come. You can continue to build on your nest egg. And as for the market liquidity in cryptocurrency, USDT dominance is looking very healthy here for the sake of the bulls, Bitcoin bulls and crypto altcoin bulls. Another day down, getting closer to the low here at 3.7. That's going to be the big test. Testing these previous lows. If we get a bounce and a strong move away, very, very weak for Bitcoin and altcoins, a bit of a weak bounce, and it continues to flatline and eventually break 3.7, then I think we start some sort of extreme hopium and huge rockets, bull markets, and everything that I talked about at the beginning of the video, looking at how bull markets continue on. So ideally, that's the thing that happens. Lots of money comes flooding in, lots of stable coins come flooding out and into the cryptocurrency space, and then things just basically pop off. The next level to watch, 2.5% if we get a breakdown of 3.7. The total crypto market cap had another day higher. The week is looking relatively good here. You can see the daily close and the daily price. We're at $3.8 trillion with a new all-time high price and new all-time high daily closing. Now the target above is at 4.15 trillion. That's looking at a repeat of the previous move. So nothing changes on the Elliott wave count, still heading up. Wave 3 of 5 of 5. We're basically in this final leg into this final peak, which is another reason why I think we've got the insane boom. 700% already on Bitcoin to this point. We're into that final phase of the market, heading into its final top before, at least in my opinion, we reach some top over the coming years, couple of years here. This has to line up with, say, crypto's top, real estate and the economy top in the US, the stock market top, and then things will start to trickle their way down before everyone figures it out sometime, I'm guessing around 2027, 2028, and then we head into, say, like a 2029 depressive state. Now, of course, everything is subject to change. We're talking about cycles a long way out here. If we see different signs, we have to play with it. I still think there'll be a collapse coming. Just when those dates are, I'm throwing a couple of numbers out there now, so stay tuned. We got to wait and see whether it happens around those years or not. That's not talking about altcoins though. I don't think altcoins are going to make it that far, but for now, they definitely had another strong day up. Altcoins and stablecoin market here, your total 3, breaking out of the $950 billion zone finally, and getting very close to taking out the last couple of highs before the market tanked. So that high was sitting around 1.04 trillion. Today we hit a top of 1.03 trillion. So very, very close here. This is potentially that breakout. If we get some corrections, the holds have got to be above $900 to $940 billion. What does that mean? We get any sort of move higher and a rejection, it has to consolidate above these levels. I think underneath 900 billion, that is going to be a pretty weak zone, and anything underneath around 840, this zone before it broke out, that's basically game over. But we're not there yet. Things are looking good. Just got to keep an eye on any of the invalidation levels in case you're holding bags that are way too big for your stress levels. The total market cap, this one here excludes the stables, similar sort of pattern, breaking out of the 725 billion, getting close to the 820, where are we at? $800 billion level. The next highs around 850 billion. So that's the key levels above there. The others dominance also continues to climb. So this is your altcoin market, excluding the top 10. And of course, stable coins are also in the top 10, climbing relatively good here. You can see it's come up to the next resistance level at 7.75. So just those tops there. Tops and bottoms, previous support, becoming resistance. I think this is one of those times where it could eventually break through and give us that overbalance of the previous run up. So even if there is some sort of corrections, provided it does not break 6.8%, then we're in for a higher low and higher prices. So with all that good news there for cryptos, ETH is on the cards here, and we had the largest day, a day or so ago, for spot ETF inflows. So the most amount of money coming into those ETFs for ETH. Huge, huge, huge day here. Biggest in history, 2024. Here we are, 2025, a year later. Huge day. Does that mean that it's completely over? No, it just happens to be around some of the previous tops. The previous highest inflow day was back on the 5th of December, and that was around the peak. It wasn't the top, but it was definitely around the peak. It was a time that you did not want to be putting your biggest investment in. Biggest investments have got to come lower down when it's most scary, and the smaller investments have got to come further up if you are still dollar cost averaging. So that just means put big amounts down and then make them smaller as the market goes up. Otherwise, you end up in a reverse pyramid. You've possibly heard me talk about this before on the channel. If you haven't, it's another good reason to subscribe. If you're reverse pyramiding, putting in a few bucks at the low, and as the market goes up, you're putting in more and more, sorry about this little thing, then what happens mathematically is if the market does turn over a little bit, all of these gains, all the money you put in up here, wipes out all of these profits, just mathematically speaking. That's why it has to be a pyramid with a strong base and a smaller top. You can't have it the other way around because you will lose even if the market drops off a little bit. You may have already experienced that before. So Ethereum's coming up to the next resistance level at 3,600. And as we talked about with the monthly swings, the percentage here is getting close to the largest percentage swing that we've seen on a monthly chart. So we're talking macro moves here for ETH. We're at around 155% so far in the longest swing, in the current swing, and the longest swing you can see right here is 170. If we got to 170, that would take us to around 3,750, call it $3,700, $3,800 per ETH. And at that point, there is a potential for resistance at around the previous resistance level at $3,800. So it's sort of lining up pretty well with the largest move. This cycle, potentially we get a bigger move than 170% in a single swing. Therefore, ETH could push up a lot higher. But even so, if it takes a little while, a month or so just to consolidate and then keep moving, that could be also a significant option here, or a good option, because of the time that it's taken so far, the price resistance overhead, the extreme inflows we've seen that we've never seen before. And as I said, it doesn't mean that ETH's move is over. It might just need some time to consolidate the wildness of these ETF inflows. So basically, a lot of people bought in the last couple of days on those ETFs, hoping for ETH to do what it has already done. So what has ETH already done? Well, it's already run 170% from the low. They're looking at that going, oh, it's come from 2,000, now it's 3,000. I've got to get in. And everyone's flooded in. So hold the horses there. It might still have further an invalidation. First level around 2,800, 2,900, the level that it had to break through that we've been watching now for months. And if that happens, then you just want to keep an eye on any closes below around sort of 23, 22. We'll come to that later. It's not important right now. I think there'll be plenty of time to get to that because the ETH BTC chart is still looking relatively strong. It's coming up to its 50% at 2.9%. So if you can read these like percentages, because it's a percentage of the Bitcoin's value, then it's going to make life a lot easier. The overbalance in time and price target. So essentially the almost confirmed trend change signal, that's all this is looking at here, 3.2%. So we're looking at roughly around 3.2. It breaks the 50%, so the price would have to go above. That's a good sign, that's positive, meaning that ETH could outperform Bitcoin. And here's your lows, here are your highs. So that's also a support and resistance level that the market has tested before and failed at. So therefore breaking above that could be another fantastic sign. So above 3.2% is going to be another very, very strong signal that ETH has got further to run to the upside and outperform Bitcoin. That's what we're looking at. It's not too far away at the moment, percentage-wise, roughly about 11, 12%. And XRP hits a new all-time high, $3.50, call it 55, $3.55. The previous high back in the day was, it says 3.30 here, but on Binance and a couple of the other exchanges, I remember living through this, it was about $3.50. I remember specifically a guy at the gym, somewhere when XRP had crashed the next month, said, is it ever going to come back? And I wasn't sure at the time, but here we are, 7.5 years later. XRP new all-time high. But what you got to keep in mind is the XRP BTC price. There is resistance, very strong resistance overhead at roughly around 3,200 Satoshis. So keep a very strong eye on that. If there happens to be a breakout here, that could be really nice for XRP USD if it breaks out while Bitcoin is still up. because you could get an even faster pace in its USD price. It's possibly somewhere around 4,500 Satoshis to 5,000 Satoshis. That's pretty much the next level should it break out of 3,300 Satoshis. Look at the resistance for the last 5 or so years at that level. It's going to be massive if it can do it. So a bit of room to run there for XRP. SUI USD is also doing well, holding its ground here at $4. The volume is increasing, and ideally if there's some closes here, I think we're going to see a new all-time high for SUI as well. It also looks okay against its Bitcoin pairing, holding above 3,200 Satoshis. You can see the strength here, a bit more volume coming back, so that's all relatively good signs. And also Sol is a big one that people love to look at. Sol BTC might be on its way finally, but it's definitely the laggard out of those few altcoins that we are watching. Ideally above 15,000 or 150,000 Satoshis here is the goal for Sol. Next up, 180,000. It's really this level here. Otherwise, these could all be failed attempts longer term. Doesn't mean the Sol USD price isn't going to go up, because obviously Bitcoin's going up and Sol USD is going up. It just means that the gains might not be as much as what you see with other altcoins. So there we have it. Bitcoin closing out the second highest daily close in history, potentially for the short term, if it's not going any higher, a lower swing top forming on the daily. Keep a watch out, stay tuned to the channel. I'll be back with you at the next video as soon as possible. I'm heading over to Indonesia this afternoon for a surf trip, but I'll be making videos and surfing while I'm over there. So look forward to seeing you from Indonesia. Have a great weekend, guys. Stay tuned, and I'll see you at the next one. Cheers.